Hello my fellow investors, and welcome back to another stock analysis video as well as earnings report. And today guys, this is now the second one that I'm going to put out today on the 17th for you guys since I did miss yesterday. Let's take a look at the company Vale. This company just had earnings yesterday, post-market, and well, honestly, this is usually one of my best companies that I like to do videos on because I don't know, you guys really do enjoy mining companies. At least when it comes to viewership, you guys just absolutely destroy them. So let's see what we can do with this one. So let's take a look at Vale's earnings. Let's also take a look at their previous fundamentals. And of course, see if the current share price, this is looking like a buy. So with that said, let's get started with this analysis. And now coming into guys, Seeking Alpha's earnings summary. Unfortunately, this has not been updated, but we can at least take a look at the EPSs, at least their estimates. We got EPS normalized estimate of 60 cents, EPS gap estimate 63 cents, revenue estimate of $11.38 billion. You can see it was only two people revised it, and it was up one and then down one. So unfortunately, we also don't have anything in regards to like they beat by this much, they beat by this much article, because no, they are a foreign company. So unfortunately, this is all we got right now. But now we can actually take a look at their earnings report and see what they actually did. And of course, guys, like always, this will be linked in the description below if anybody would like to read it. Now, the first thing that we got, it is the CEO's comment. Now, this is very long. I am not going to read this whole entire thing, but just a few sentences. We got over here, quote, "In 2022, we made significant progress on our strategic priorities. In safety, we were proud to have eliminated 40% of our upstream structure and removed the B3, B4 dam from high risk level. In Iron Solutions, we advance on our path to becoming a supplier of choice for high-quality products, leveraging Vale's unique mineral endowment and capitalization on the decarbonization trend of the steel industry. On that, we have announced hubs to develop green solutions in the Middle East and secured MOUs with clients representing around 50% of our Scope 3 emissions, expanding the offer of low-carbon products such as high-grade pellets and briquettes. On operations, we took concrete actions to deliver on our long-term growth guidance by advancing on our critical milestones we had laid out for the year." So yeah, that's pretty much, guys. They're just going over essentially what they did throughout the year. Again, you guys can read this for yourselves, but I really want to take a look at their operating revenues and compare this to 2021 as well as Q3 of 2022. We go over here when it comes into the net operating revenues. And by the way, before anybody says anything, you guys can see right there, US dollars, millions. So just let everybody know. So we got over here, guys, net operating revenues of $11.9 billion in Q4 2022. Compare that to Q4 2021, it was $13.1 billion. So that was actually a decrease within the same time period of Q4 2021 and Q4 2022. However, it was a pretty big increase from Q3 of 2022 to Q4 of 2022. When it comes into the total cost and expenses, this actually went up a little bit. It actually went up even more than that of Q4 2021. Negative $7.89 billion in Q4 2022. Q4 2021, it was $7.22 billion. Looking at the adjusted EBIT from continuing operations, we got $3.7 billion. Q4 2021, it was $3.9 billion. Adjusted EBIT margin percent, we got 31% as opposed to Q4 2021, it was 30%. Adjusted EBITDA from continuing operations, we actually went down by around $100 million or so, $4.626 billion in Q4 2022 to Q4 2021, it was $4.726 billion. Adjusted EBITDA margin percent, it was 39% in Q4 2022 and 36% in Q4 2021. Pro forma adjusted EBITDA, I have no idea what that word means, by the way. I've seen it a couple times, I have no idea what it means. From continuing operations, $5 billion, Q4 2021, $6.85 billion. And net income from continuing operations attributable to Vale shareholders, it was $3.7 billion, and before it was $5.35 billion. Net debt, unfortunately, this went up a significant amount. I mean, 1 year ago, it was $1.87 billion. Right now, it's almost $8 billion. And capital expenditures, guys, actually kind of remain the same. They did go up quarter over quarter. You can see here Q3 of 2022, it was $1.23 billion. Q4 of 2022, $1.8 billion. But in line with Q4 2021 at $1.75 billion. So now let's actually take a look at the highlights. We got the business result. Pro forma adjusted EBITDA from continued operations of US dollars 50 billion in Q4, US $1 billion higher quarter over quarter, mainly reflecting the higher iron ore sales volumes and higher realized prices of nickel and copper. Pro forma adjusted EBITDA from continued operations of US dollars $20.9 billion in 2022, 38% lower than 2021, mainly due to 23.6% lower iron ore fines realized prices. Okay, so they essentially just went down because of the fact that iron ore just went down in comparison to that year. So all of these numbers that went down over here, guys, they basically went down because it wasn't their fault. It was just the market. And again, this is a material-based company. If they do mine a specific commodity, they're going to follow that. Now, I do want to take a look at one more thing, and that is none other than the free cash flow. We got here free cash flow from operations of US dollars of 5.7 billion in 2022 versus $20 billion in 2021 due to a lower EBITDA. And actually, I lied. I do want to cover one more thing, and that it's, well, the company's dividend, because this company is pretty well known for its dividend. Well, not so much the consistency of it, but it is a very, very big yield overall. So let's take a look at this. Value creation and distribution. US dollars of 2.6 billion paid in dividends, interest on capital and share repurchases in 2022. So guys, they did $12.6 billion in repurchases as well as dividends in 2022. Since 2020, Vale has returned $35 billion to shareholders, representing 46% of its market cap. Wow! 50% of its market cap is essentially going into the shareholders. That's insane. And look at this, $1.8 billion in dividends to be paid on March 2023, considering Vale's ordinary dividend policy applied to 2H22 results. There's something interesting about this company's dividend, and I really would like everybody's help on this if you guys can, if possible, because I kind of find it a little bit hard to actually find. And I'll get to that when I get to that. But we got over here, third share buyback program now 43% complete, with a disbursement of $3.4 billion to repurchase 213 million shares, with the 3 buyback programs, earnings and dividends on a per share basis, each have increased 15% since April 2021. So you can see that, yeah, they're buying back shares and they're also issuing a dividend, and their purchase program, their buyback program, isn't even 50% done. So definitely something to look forward to. And now, guys, let's come over here into the calculator. We got the ticker symbol for VALE, market cap of $426 billion. Now, this is actually incorrect because, well, I don't think that this is taken in US dollars, mainly because if we come here to Seeking Alpha, we can see that the market cap, it is $77.5 billion. So yeah, the market cap should be $77.5 billion, not $426 billion. Again, this is taken from Google Finance, so I don't really have any control over that. So just letting you guys know that that's really the case. We got a PE of 3.95 with a current share price of $17.09. This one is actually correct because if we come over here to the actual share price, we can see that it is $17.09. On the 1 year, guys, they are down 2.01%. On the year to date, they're up 4.53%. 52-week range is $11.72 to $21.29. We aren't at 52-week lows, but we're also not 52-week highs. We're somewhat in the middle, kind of leaning more towards the higher end of this. And of course, they do pay out a dividend of $1.47. And in accordance to Seeking Alpha, this is a yield of 8.61%. I believe the last time I did this yield was like 16. So they definitely dropped it. And I think the reason why they dropped it is because they cut their dividend. Mainly because I'm looking at this dividend growth over here and it's saying 0. Payout ratio is 31.82%. 5-year CAGR of almost 40%, guys. That's absolutely insane. Ex-dividend date was December 13th. Payout date apparently is going to be in March, and they pay the dividend semi-annually. Now, looking further into this dividend history, well, yeah, here's the problem when it comes to this, is that they've pretty much been all over the place. Obviously, they do pay it semi-annually, so only twice a year. However, we could see that, well, sometimes they pay it more than a year, right? In 2021, they paid 3 times, in March, in June, and in September. In 2022, they only paid it twice a year, 72 cents on March 8th, and August 11th, they paid 69 cents. And, well, so far, guys, okay, well, I think that, interesting. This is actually really, really interesting because we got over here that they did pay out a 6-cent dividend in December 12th, 2022. Well, that's essentially 3 times a year, so I don't necessarily know what's happening here. Again, I'm not really vested in this company a lot, so if you guys could help me out, that'd be great. But from what it's looking like, guys, dividend, it's pretty much all over the place. It's not really that consistent. Again, I could be wrong on this. Please let me know. But here's something else that I want to point out in regards to this dividend, and that is essentially how they pay it off. Now, I looked this up on their website, and this is from July 28th, 2022. Vale informs that its board of directors approved the distribution to shareholders in the gross amount of, $3.57. I believe that is Brazilian. I'm pretty sure that is the Brazilian dollar. That's not really what I'm mainly interested in right now. We got right here, the distribution is aligned with Vale shareholders' dividend policy and refers to the first half of 2022, calculated based on the balance sheet dated June 30th, 2022. Merely as a reference, the total distribution would be equivalent to a gross amount approximately of $66, and this is US dollars per share. So they kind of reference here as to how they pay out this dividend, but I could not really find this dividend policy per se. So if you guys could help me out with that, that would be absolutely awesome. But yeah, they essentially paid out based on the balance sheet dated as well. At least this one, right? This one is from 2022. They paid out this dividend based on the balance sheet dated in June 30th, 2022. And this dividend, guys, of $1.40 ends up being $6.67 billion being paid on dividends every single year, based off of the shares outstanding. Now, to all of those of you guys who just saw this and are very, very keen eye, you're probably like, those numbers change. Yeah, I'm so terribly sorry. I forgot to change the value, like all the fundamentals from the stock that I had before, because I just finished doing Crocs. I forgot to change the numbers. So sorry about that. These are the correct numbers for this one. But yeah, based off of the current shares outstanding, they pay out $6.67 billion in dividends every single year. And well, looking at this on the 5-year average free cash flow perspective, they're still left with $3.95 billion in dividends every single year. However, as of their last year's free cash flow, you can see that they could not afford this. They went into negative. They went negative by $515.42 million. These payout ratios are 108.36 for the last year's free cash flow and 62.8 for the 5-year average. So this is, this is pretty much just like they can afford it on the 5-year, but not as of the last year, which is again really, really bad to see. Let's jump into these fundamentals to see what we could actually learn from them. And of course, we got the net income 5 years ago of $6.6 billion to 1 year ago of $19.8 billion. That's an increase, guys, of almost 200%. We do see this go negative 4 years ago, but again, this was mainly probably because of the fact that iron ore probably went negative, right? So again, please do your own due diligence when it comes to all of this, but for this kind of graph, seeing that we did go negative 4 years ago, and 2 years ago we spiked up to $21.7 billion, and 3 years ago it was $5 billion, I'm giving this guys a 65%. Looking at the free cash flow now, we see something a little bit similar. However, we don't see any negatives. 5 years ago of $8.75 billion to 1 year ago of $6.16 billion. This is where, unfortunately, lots of last year's free cash flow, they did a lot worse than the average. And this average, by the way, is being skewed by this 2 year ago value. This is a drop of 30% on the 5 year with an average of $10.6 billion. Now, you can see that they were down from 5 to 4, then they started to go up. Massive spike 2 years ago from 10.3 billion to 19.63 billion. Guys, massive. So because of these outliers over here and this 1 year ago value as well, I'm going to give this a 55%. And in fact, let's actually come back over here to the net income. And I'm going to change this because I'm kind of having second thoughts about this. I would actually put this at a much lower grade. I would put this one at around like a 50%, mainly for that negative. So yeah, unfortunately, let's change this to 50%. Let's keep this at 55%. And when it comes into the revenue, let's see. We got $34.74 billion to 1 year ago of $44 billion. That is an increase of a little bit more than 26.5% on the 5 year. And we could see a very consistent increase from 5 all the way up to 2 years ago. A little bit of a jump from 3 to 2, but it's okay, I guess you could say. Though they did come down from 2 to 1 year ago. That's why I'm giving this guys an 80%. Looking at the total assets minus total liabilities. While they are in the positive on this one, you can see that this is consistently decreasing, which is not good to see. Average total assets is $87 billion. Average liabilities is $51.3 billion. And with this difference, we get $35.76 billion. I'm sorry, but I'm giving this a 40%. That consistent decrease is not something I like, even though they have had instances of slightly bringing it up, but then later coming back down. Looking at the cash flow minus the liabilities, this one is interesting because, well, they have had years where they were really in the red, especially 3 years ago. And if we take a look at the free cash flow 3 years ago, you can see that it really wasn't that bad, right? So the fact that they did their worst 3 years ago at negative $47 billion, really bad. But then again, they brought it back up 2 years ago and even 1 year ago where their free cash flow went down a little bit. It did not go to the lowest point, which is 3 years ago. Average cash flow, it is negative $40.1 billion. And I'm giving this guys a 55%, mainly because they have had 2 instances. Okay, well, they've had 1 instance, but at least 1 year ago, they did not go as low as 3 years ago. So that's why I'm giving him a 55%. Looking now at the shares outstanding, the silent killer, we got 5 years ago of 5.2 billion shares to today of 4.5 billion shares. That is a pretty big decrease on the 5-year of 12.6%. And even from the previous to the current year, there's another big decrease of 6.14%. Now, this is not perfect. They have had instances of increasing it very, very minutely, mainly from 4 to 3 to 2 years ago, going from 5.126 to 5.128 to 5.129. But then as of 1 year ago, they brought it from 5.1299 billion to essentially 4.8 billion, 4.84 billion. That's really, really good. And then as of 1 year ago to today, they went from 4.84 billion to 4.5 billion. So I'm giving this guys an 80%. Looking now at the cash and equivalents, we got $5.2 billion with an average of almost $8 billion. And looking at the overall grades, we gave the net income of 50%, free cash flow 55%, revenue 80%, assets minus liabilities 40%, cash flow minus liabilities 55%, and the shares outstanding of 80%, overall grade of 61%. But do we buy it at the current share price, even though that it is towards the latter end of the 52-week high? So let's come over here and make some assumptions, low, median, high, and I'm going to use the revenue growth of 1, 2, and 3%. Guys, looking at seeking alpha, we can see that the forward is estimated at 1.55. So I think me saying 1, 2, and 3, I think it's fairly reasonable. Predicted share buyback, I don't think that they'll do another 12%, so I went with 2, 5, and 8%. This means that, well, you know, within the next 4 years, they'll buy back at max 8%. Still really, really good. And of course, with a required rate of return of 10%, not adjusting for debt, this puts me at $23.50 to $26.81. And adjusting for debt, it comes down by like $1 to $22.51 to $25.76. With a margin of safety of 5, 10, 50%. This is between now $19.13 to $24.47. Guys, current share price is $17.09. So even after, well, even though it is still like in the middle, skewing more towards 52-week high, this is still looking like a very good buy overall. Please, that does not mean that you go out and buy it. It means that you do more research on it, right? It means that you read the earnings report, which will be linked in the description below. And on top of that, guys, all of these calculators are for free. Please use them to see if what you believe results in a share price within this current share price. And of course, every investment is the present value of all future cash flow. So just keep that in mind to make reasonable and conservative assumptions to see if maybe this is looking like a pretty good buy for you. Because it is for me, doesn't mean that it is for you. So again, do your own due diligence. This is not financial advice. All I'm asking for in return, guys, is just like, subscribe, comment. Really does help out with the algorithm on YouTube. Thank you so much for everybody who has subscribed. And this is now the second video for today. You guys got 3 videos. You should have gotten the technical analysis, the one at noon, which was for Crocs, and this one at 4 p.m. So, yep, I'm more than happy to provide more content for you guys. And I'm terribly sorry when they don't make it. It really does bum me out. So, you know, all I'm asking for in return, free stuff, daily content. Help me grow my channel. Like, subscribe, comment. That's about it. So now let's actually take a look at this $1.47. Guys, putting in $5,725, you get almost $500 in annual dividends. That's insane. That's insane. Problem is that that dividend is looking a little bit iffy. So if you guys could help me out with that one, please, 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 if you guys could, that'd be great, because I am not fully certain of how they actually pay out that dividend. Normally, US companies use the free cash flow. This is a Brazilian company, may be different. So please, if you guys can help me out with that one, that'd be great. But $500, guys, almost $500 is absolutely insane. But please be wary when it comes to this. All in all, when it comes to Vale, you know, this is a mining company that I actually like, honestly. Not all mining companies are perfect. I mean, they're very, very rare. I only know of I only know this one in Rio Tinto, and the one I'm invested in is Rio Tinto. but I would argue that you could see positives in both, honestly. That pretty much is it for this video. Like if you like, comment, subscribe. It really does help with the algorithm on YouTube. You guys can follow us on the YouTube sites. Link in the description below. So with that said, peace out, and I will see you all in the next stock analysis video as well as earnings report.